Good morning, everybody, and this is your S&P 500 day trade setup for today. So a bit of a meltdown. We did break through a pretty crucial level. My trade got taken out, stock got taken out as well. This 46.50 area, we broke through it. We've come back and it does look like we're testing that area. We did bounce off the next level, which is down here at 46.09. So I suspect 4600 is our next line in the sand right now. We obviously need to wait for the Feds. The Feds will come out with their song and dance later today, and that's probably going to impact the direction that we need to move in. I think one of the key things you need to do at the moment is get a Fibonacci on, just so you can understand where the 61.8 is. So we've got the 50, we've almost turned off the 50, 61.8, not really much structure. I suppose we could call that swing low, but a structure, we call that rejection, and we use it as support there. So that's kind of where we are. I do like the oscillators, as I said, that's starting to look quite interesting. At the moment, on the 3 hour is grouped to the downside as well. We've had two moves. There's our first move, consolidation, second move. So that is done. I just want to check whether this head and shoulders is done as well. We need that there. And we need that. Okay, head and shoulders target is the 61.8, which is pretty much down here. 45.90 area. So yeah, still nothing really exciting to play for at the moment. This level that we have here, which is the 50% Fibonacci, and you can see it's a previous breakout, has been tested quite nicely with an inside bar. So we're always looking for inside bars, engulfing bars, or pin bars. But in my experience, when you start looking at inside bars, typically look for a double bottom. And you see here's a good example, there and there. That's also a pin bar. Pin bars, typically you normally have almost like a V reversal on the lower time frames. But engulfing bars and inside bars, you can see here's another one here, inside bar, engulfing bar. It didn't go for very far, but typically that is the direction that that's typically what happens when you see that kind of strip price action on a level. So moving down the hour, and if you guys are still watching, I appreciate a like or a comment. It is a great way to help me grow the channel and get to more people. And from the hour perspective, we've got a crossover. We had sort of hovering on the 155, breakthrough, rejection on the 155 with a pin bar. And you can see my comment just now on pin bars. Typically, it's a normal, pretty quick reversal. And that's exactly what happened here. Bit of a meltdown, had some gaps, and then we had buyers come in. Now, the thing that really worrying me at the moment is basically market retrace 0.65% with the buyers coming in at the close. That is always an indication that if you are short, it's time to get out. Okay, so I just want to get the channel in, make the charts really messy for us. Okay, so that is the channel we're in. We've been in it for 2 days, basically. So I would expect us, if we do break above it, I would expect us to go sideways. I was expecting us to go sideways. Yesterday, it didn't happen. So at the moment, I'm looking for another leg down. So I'm looking for a leg down and then looking for structure to buy off. And you're probably going to be better off doing this on the 15-minute with all your structure built in. So first things first, hindsight being a perfect science, have a look when we did the video yesterday. It wasn't even an option to think that we were heading sort of to the upside. Should have been looking for a move to the downside. We blow all the moving averages, grouping of the oscillators. Look at that, bouncing off the 66 EMA, and then break below the bit of structure here should have been an indication for a short. Anyway, hindsight's always a perfect science. And where we are at the moment, we've got the moving averages flattening, fairly similar to what happened here. Difference is the oscillators are all over the place. So we may see a bit of a consolidation happen here, and it can break either way, obviously. So what you're looking to do, I'm making this chart really messy for you, but there is your flag. So it could be a bull flag, so a nice strong move up, consolidation for a leg up. That would then mean we need to come back and test this area of 46.50. So we need to break through 46.50, come back and test it. That would give us opportunity to buy into this. Alternatively, a break below the structure of 46.37 or 46.36, should we rather say. So break a retest of that area. Then we're looking for a retest of a little bit lower down. And I'm at one more line here. I wouldn't go all the way to the downside. I'd be looking for profit here at 46.22. Now, I know that doesn't look like a lot, but it's pretty volatile. It's 166 points stop loss and 122. So it's actually not even a one-to-one trade, so it's not even worth it. So yeah, so if it does break down, obviously I'm looking for structure down here for a move back up. If we break this level here at 46.50, that breaks the channel. So then I'm looking for any kind of retest, and I'm looking for some crossover of moving averages, and I'm looking for a grouping of our oscillators to downside, similar to what we had going into close yesterday. And then we're looking for a move to the upside. And that could be pretty violent. So just bear in mind, they've got the Feds coming out. So you could have the market sort of drifting in one direction as fear mongers step in. And then you're going to have the people that have been driving this market all along and suddenly step in and sort of buy the news. Okay, so be careful. I think that's the crucial thing. But I personally am not looking to short. I'm looking for the structure that's indicating it's time to buy again, and also need to add to the long-term portfolio as well. Anyway, that's kind of my view at the moment. Hope it helps, and we'll catch up with you tomorrow morning. Cheers for now.